Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Welcome to the Finovate podcast. This is Greg Palmer. Joining me today, we have Adrienne Harris, currently a professor of the practice at University of Michigan and a former special assistant to the president for economic policy in the Obama administration. Adrienne, thank you so much for joining me on the show today.
Thanks for having me.
So just to give a little bit of background here, this is a continuation of a discussion that I had with Brett King, and this is actually going to be kind of joint aired on Breaking Banks and the Finovate podcast. But we're talking to a lot of different people about how this current period of turmoil will affect the fintech industry. Obviously, a couple of really big shocks to the system taking place right now with COVID-19, with what looks like an impending global recession. And this is going to have far-reaching implications within the realm of financial technology. And so I'd like to just get your thoughts as someone who's kind of seen this from a policy standpoint in the government office and also now in an academic setting. What are you seeing? How do you feel like this is going to start to affect fintech as an industry?
Yeah, absolutely. It's a great question and one that a lot of people are asking, to your earlier point. I think people will remember that fintech, as we think of it today, really did come about after the last big crisis we all lived through, which was the financial crisis. And so as a space, it really hasn't yet experienced this sort of turmoil, put aside even just the public health aspects of it, but the financial and economic turmoil that we're all experiencing. Fintech really hasn't been through this sort of challenge. And for a long time, people have been speculating about and wondering how the industry was going to deal with any kind of economic downturn, much less one of the size and scope that we expect to experience in the coming months. So I think there's a lot of open questions here. Often people have been speculating about how the lending piece of fintech is going to do in particular because of the new underwriting models that have been employed in the space and how they're going to perform when we saw an economic downturn. So I think that is sort of first and foremost on a lot of people's minds, especially as we see the trouble that small businesses are having and that a lot of individuals are having as well. So I think that's high on everyone's mind. And then there'll be a number of other business models as we think about early access to earned but not yet paid wages and the set of apps that really are centered around people's financial health. It's going to be a lot of questions about how they can perform, and to the extent that many of these companies are still either pre-revenue or not yet profitable and still relying on venture dollars. I think we'll have to wait and see how the capital flows change over the course of this crisis.
Well, a couple of really interesting pieces to pick up there. I mean, obviously, the capital one is crucial, particularly for the fintech standpoint. But I'd like to come back to some of the earlier pieces. It looks like this is an area where fintech can help, right? Where there's a lot that as an industry we have to offer to people who are struggling right now, people who need a little bit of help. And certainly it looks like technology can help do some really nice things and help cover people in a time when they really need it. But to your earlier point, this is really uncharted waters for all of us. This is something where over the last 10 years, we've had this really nice period of expansion where things have all been kind of going swimmingly, and fintech has been allowed to push forward in this environment and still do some really cool things, but it hasn't been tested in the way that maybe it needs to be tested to get that resiliency in there. Does the fact that it's now getting tested in that way, in that kind of, this way that is really a shock test, this resiliency test, does that mean we'll come out of it on the other side in a better, healthier place, despite some of the painful moments that we'll obviously have to go through to get there?
And that's certainly the hope. Fintech really did come about with this promise that it was going to be better for consumer financial health, better for market health. And to your point, because it hasn't been tested, there is this open question. But it certainly is the hope that these tools that have been developing through a period of growth over the last 10 years will demonstrate to their customers, to regulators, to other stakeholders that they did actually help make a difference and maybe prevent things from being as bad as they otherwise might have been. So that is the hope. And I think there's a lot of tools that we have now and a lot of data that we have now coming into this corona crisis that we didn't have when we were going through the financial crisis. So I really do think it's a matter of how quickly the fintechs, their incumbent partners, and government institutions are able to deploy and leverage some of these new tools in order to mitigate some of the economic harms that we know we're going to see.
Right, right. Well, and certainly, this is something which should be right up fintech's alley. Over the last 10 years, we've heard from a lot of fintech founders this idea: we want to put the customers first. We want to give customers the ability to have more control over their finances, regardless of where they are physically. We want to give people tools that they didn't used to have before. And I know quite a few fintech founders who are, I think, doing a good job of putting the customer first and looking at them and saying, if we can help these people out, we'll have a profitable business, but also we can do something that will really benefit the globe and people all around the world. And now I think there's an opportunity for them to prove it and really kind of demonstrate that they can back that up. On the flip side, I think the reverse can also be true, that a lot of companies who kind of are talking that talk might not be able to walk the walk. And so I think there probably will be some companies that are going to struggle over the next couple of months, or potentially even longer than that, as we look to see how these challenges unfold. And so it as I said, it could be painful, but culling those companies out and kind of elevating the ones who are able to really deliver may ultimately be a good thing for the industry. So, in looking at this from kind of the global good perspective, where do you see areas where fintech really has the most power to do good in this type of situation when we've got such a major shock going on?
Yeah, I think you're absolutely right to highlight here that there's a lot on the line for the space in general. I mean, it is a space that has had a bit of a halo around it because of its ethos around doing good. And to the extent companies are able to do that, they're going to continue to have that halo. But where people fall down, I do think it will have a little bit of blowback on the industry writ large. And we might see some of the frothiness come off when it comes to investment capital. In terms of the biggest opportunities for doing good, I mean, as I mentioned, we have data now about people and about their finances like we've never had before, and we should be able to leverage that data and the insights that the fintech companies have been able to glean from that data to really help people manage through this crisis in a way that is particular to their individual circumstances. And I think that would be an incredible tool to be able to leverage to help people in this very difficult time. Another one of the things that people often point to about fintech is just its speed and the nimbleness to it. So, now there's all this conversation about how quickly or slowly the government will get these stimulus checks into people's hands. And this is really a place where fintech can help deliver, either underwrite small business loans faster and very literally deliver money more quickly to people as we think about the payments mechanisms that mostly live inside fintech and don't yet live inside the incumbent institutions. So I think those are just a few of the tools that are really going to help us as we come through this crisis, and some of the big opportunities for fintech. But I think, I'll go back to this point around data. There is so much data now that exists that we didn't have before. We didn't have in a usable format before. And of course, subject to all the concerns we have about privacy and how that data gets used. But you really can imagine that fintech has a great role to play here in thinking about how we use that data to really provide individualized and accurate solutions for people.
I think data is crucial. And then this is also one of the pieces which I've heard some other people say as well. The idea that the data that we have up until this point in fintech is somewhat flawed because it all comes from a market where things are expanding, things are growing. And so that's the only data that a lot of our models have. But now we're going to get a new set of data, some more potentially useful data, what happens in this kind of stressful situation. And that data should make fintech stronger, should certainly make solutions stronger. And I like the piece about injecting liquidity as well. We know that this is something which is unfolding very rapidly. Speed matters here. And just in case it ends up mattering, we're recording this, by the way, on March 31st. So the comment about the checks, how quickly they get out there, we'll see. Depending on when this airs, it may already have happened. It may still be a couple of weeks away. But to your point, being able to take that money and get it into people's hands faster is absolutely a real benefit that would come from this. And I think for the other piece that I'm really kind of, and I hesitate to use the word excited because this is something which obviously has so many negative components to it that I don't want to sound gleeful about how it's all unfolding. But I am excited to sort of get past this hurdle that we've had where a lot of people have said, we don't actually need a fintech solution here because what we have is working well. And this is one of those really common objections that you hear from banks or other financial institutions who are maybe hesitant to engage with new technology. And now we sort of have this outside force coming in and saying, actually, you do need to engage with technology. You do need to do something a little bit different because the set of circumstances has changed. And so that's something which I'm really excited to see as well, and see if there is maybe a behavior shift that comes about as a result of this and people embrace technology a little bit more.
Yeah, absolutely. And I think, look, maybe it is true, and I'm sure reasonable minds can disagree that the system works fairly well, but that's not to say that it couldn't work better and there are not improvements to be had. And then what you end up with is a bit of a debate about whether this precise moment is the time to really test out, right, some of those new technologies and new functionalities. But in truth, those of us who have been in the fintech space for a long time know that some of these things really aren't that new and can actually be very easily leveraged and integrated with existing systems and used to the benefit of consumers all over the world.
Yeah, absolutely. And I think, it is maybe easier than some people in the industry make it out to be, although not to downplay the risks and things like that, which can also happen. So we are coming up on the end of our time, at least from the Finovate podcast standpoint. And I want to just finish on one question. We talked about some of the potential positives that could come out of this for the fintech industry. Obviously, there are quite a few potential negatives for individuals in the space and also for people in going about their daily business. But what new pitfalls do fintech companies really have to be aware of now that maybe they didn't have to worry so much about in January of this year?
Yeah, I would sort of put these pitfalls in two buckets. One bucket is the business specific set of pitfalls, right? People are going to realize that their underwriting algorithm actually doesn't work as well, or that the business model is not as robust as they once thought because it's only been tested, to your earlier point, in expansionary times. So that's sort of the micro or business level set of pitfalls. I think the more macro set of pitfalls is, as I alluded to earlier, to date, fintech has largely enjoyed a halo with respect to the view from the policymaker and regulator standpoint, just because of the time that it came about and the messaging around how it was different from traditional financial services institutions. And I would say, to the extent that fintech companies fall down on the job given this crisis, I think they're going to find themselves subject to increased scrutiny from policymakers and regulators as a result. So there's a lot at stake here for them.
That's a very good point, and it's one that I think not a lot of people are necessarily thinking about right now. But what we do now will set the stage for how regulators and policymakers think of fintech and how it's perceived. And so for every company that fails or that sort of doesn't pass the test that's being met right now, it just makes it easier and easier to justify harsher rules, harsher regulations, and things like that, which will be potentially very long lasting. There is the bell for us. That concludes the Finovate portion of this. Now, what we're going to do, because this is really interesting, there's a lot of pieces still to cover, and we're going to pick this up on the Breaking Banks podcast as well and continue this. So anybody listening on the Finovate podcast from here, please do check out Breaking Banks as well. We'll get into this conversation a little bit more deeply with Brett King as well. Adrienne Harris, thank you so much for joining us.
Thank you, and likewise.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@Finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.